Hello, viewers. Welcome back. In this session, we will be covering on understanding the basic fundamentals of the credit note and debit note. Like I mentioned in one of my previous videos, that like this passing of debit note, credit note, especially for beginners, it's going to be confusing. Like I mentioned during my college days, also I used to always get confused between this debit note and credit note. When do I pass a debit note? When do I pass a credit note? Now, if you put some thought process into it, it becomes easier. But on the face of it, it always confuses. When will I pass a debit note? When will I pass a credit note? So this is part of the fundamental section where we will understand why a particular transaction is called as a debit note or a credit note, and we will also see when do we pass a credit note, what are the instances under which a credit note is passed, and what are the instances under which a debit note is passed, right? So for that, basically we have to understand the transaction. And the most important thing, see, once you understand the fundamental concept of these debit and credit note, it becomes easy for us to comprehend and quickly like understand the impact and of these notes for each of the ledgers in the books of account. Okay. So let me just quickly share my screen. So first, let us take the uh, original transaction, or the fundamental transactions. First, what you transact or what you pass, and then we will take a use case of for that particular transaction. If there are any instances where debit note or a credit note needs to be passed, why and how you're going to pass that entry, and what impact that you're going to have on the ledger. Okay, so let us take one simple example, that I make a sale entry. Okay, so let me just write down uh, sale of goods to ABC and company for rupees 50,000. Okay, so this is my primary entry, right? So we have to know how the ledger is going to reflect for this particular transaction, right? So I'm not going to pass the transaction. All of you now, by this time you would have understood how to capture this transaction in Tally. uh, the ledger, if you see, there are two ledgers that are impacting this particular transaction. One is your sales ledger, and the other one is your party ledger, right? So if you take the sales ledger, so let us take the sales ledger. Okay, so this is your sales ledger. Okay, so this is your debit side, this is your credit side, and the other ledger that is going to be impacted is your uh, ABC and company. So again, you have this debit side and also you have this credit side. Okay, so in this transaction, if you see, the ledger posting is going to happen like this. So this is going to be ABC and company. 50,000 is going to be on the credit side in the sales ledger, and in the party ledger, yes, it is going to be on account of sales. Okay, and the amount is going to be 50,000, right? So which means you have to receive money at a later point in time, an amount of 50,000 rupees from ABC and company. Now, let's take this second use case. In the second use case, you made a sale of 50,000 rupees, and now the party for some reason. I mean, like whatever material that you have supplied, it maybe it could be some of the item could be defective, which basically the customer is going to return those material back to you. So when he's going to return this material back to you, so example, let us say that he is going to return out of the 50,000, he is going to return 5,000 rupees worth of material, okay, back to you, right? So he's going to return this entry. He's going to return this item. So now you have to uh, pass a return entry in your books of account because the material is coming back to you. And what is the impact of the material that is returned? So the impact is that yes, my sales is now going to actually, it has to reduce by 5,000 rupees, and the money that I'm supposed to collect from this customer has come down, right? So instead of paying 50,000 rupees, he is now going to pay me how much? Only 45,000 rupees he is going to pay me, right? So first we will understand the return entry. So the return entry is what we are going to now capture in the credit note, right? Now I will explain why we call this as a credit note, okay? So once we understand this transaction and the posting into the respective ledgers, you will understand the implication of this word credit and note, okay? So the entry that I'm going to pass here now is going to be, okay, I'm going to uh, debit my sales ledger by the amount of material that is received, which is 5,000 rupees. And I have to credit my customer, who is my ABC and company, by 5,000 rupees. Okay, so this is my transaction. And now, if these transactions have to be posted into the respective ledgers, so we know that, okay, you are going to now debit your sales ledger or your sales account. Okay, so what did we do originally? We credited the sales ledger. Now, for me to bring down my actual value of sale or my net sale now, I need to bring down to 45,000 rupees, right? So now I can't cut this out and then make it 45,000 rupees. Or let's assume that I don't have the alteration facility, and that is not the right way of doing it. The right way of doing it is that you record the written transaction, right? So what am I going to do? So how do I reduce the balance from 50 to 45,000 rupees? Very simple. So once I debit, okay, so I'm going to now say by return, okay, 5,000 rupees. So what have I done? Now 50,000 is credit, 5,000 is debit. Now when you balance your ledger, automatically your credit net balance is going to be 45,000 rupees. Okay, so I have posted this particular part of my transaction, and now I'm going to post this transaction, right? So now I've debited my return here. So basically, I'm going to again say this is towards return. Okay, 5,000 rupees I'm going to credit. The moment I credit this particular transaction in my party account, and now when I balance my ledger for this particular party, so there is an original debit of 50,000 rupees, and a credit of 5,000 has been now entered here. So how does this balancing work? For example, if you take the highest value from a mathematical term, if you take it, so if you consider the highest value as your positive value, okay, and the lower value as your negative value, which is the other side of it. So in this case, if you see, 50,000 is positive, and the minus value is 5,000 rupees. And now what is the net when you are now going to take the difference of this? It is going to be 45,000 rupees, and the highest value still remaining is the plus value, right? So that way, once you pass this credit note, now the amount that ABC is going to pay you is going to be 50 minus 5,000 is going to pay you 45,000 rupees. Okay, this is clear. Now let's understand the term of this credit note, and how you will resonate or how you will relate this note to this particular ledger account, and how it helps you to retain it. Okay, now See, the credit note that we are passing is basically what is the primary indication. The primary indication is that I am going to pass a note on the credit side of my party ledger. And what is the reason? I'm going to pass the transaction on the credit side whenever in a party ledger. And when I say this party ledger, basically it is your sundry debtors, right? Or sundry debtors ledger. Whenever you pass an entry on the credit side of your sundry debtors, which means basically it is going to bring down the amount that needs to be paid by the customer, right? So, simple thing for us to understand is that a credit note is something where you are going to, predominantly pass this transaction uh, to impact the credit side of the party ledger, which will eventually bring down the outstanding balance, right? So, how do we again relate it for us to easily understand and I mean like do away with this confusion of credit note and debit note? Is that all this term, the term of credit note or debit note, okay, one thing you remember, that these are the uh, uh, transactions or the detail of information that you are going to pass in the party account, okay. So that's where you have to do. Don't worry about your sale or don't worry about your purchases, right? The moment you uh, think of this word called credit note, okay, so this is a note to the extent of the value that you are capturing in this particular voucher, whether it is credit note voucher or a debit note voucher. If it is a credit note voucher, the value of that particular voucher in the party account has to be credited. Okay, so that is why you call this as a credit note. If it is a debit note, and whatever is the value that is captured in the party account, right? So you are going to post it on the debit side of the party, which that is why it is called as a debit note. Now, after passing the entry on the credit side from a credit note to a party account, like I mentioned, broadly the credit note is associated with uh, your customer or your sundry debtors. It is not that you can't pass a credit note to your uh, supplier also. So those are the use cases that we will discuss this little later. Okay. So the first thing, I hope you can now, clearly, I mean, like, build this relationship or you can resonate with this term called credit note. Again, I'm repeating, a credit note is a note passed on the credit side of the party account, irrespective of whether it is a customer or a supplier. And debit note is the value that you are going to capture on the debit side of the party account. That is why these vouchers are called as credit note of the party, debit note of the party. Okay, so the other aspect of it, don't worry whether it is going to impact your sale or your purchase. So that's broadly about your credit note and debit note. Now let us take the example of a credit note. Okay, what are the use cases or instances in which you are going to pass a credit note? Okay, so credit note. Okay, and we will take this comparison of two entities. Okay, the two entities are your, now see, now it becomes very easy for us to understand the terms of this credit note and debit note, and also the impact and the implication of this voucher. Okay, so we will take one, your customer ledger, and also you will take your supplier ledger. Okay, which basically the group is your sundry debtors, and this is going to be your sundry creditors. Okay, so example one, a credit note to a customer, right? So credit note to a customer, you're going to pass in case of, okay, broadly in on account of your sales return. Okay, on account of your sales return, you're going to pass a credit note. Now we understand, we know that, okay, so why do we pass a credit note and where it is going to impact? So we have known this, right? So now a credit note you are going to pass on on sales return, which is going to reduce, okay, which is going to reduce the outstanding amount, okay, outstanding amount. Number two, okay, a credit note is passed on the supplier side, right? On a credit note, okay, first let me complete the use cases on the customer side, okay? So this is one area. What are the other kind of use cases where you will normally use a credit note, okay? In case, let us assume that you have made a sale entry to a customer where you were actually the cost of that particular material or the cost of the service that you have quoted is, say, in case of a goods, let us say the product that you are selling, actually as per your quotation, you were supposed to charge him 100 rupees, okay, whatever is the arrangement agreement that you have made with the customer, right? Now while invoicing, let us assume that the normal prevailing rate for that particular item is, say, 125 rupees. Okay, so now you had a special arrangement and you had committed to that particular customer with your quotation or with your sale order. We will all discuss about this sale order, purchase order at the later stage. Okay, so in this case, what has happened? You have charged him more, actually, right? So you have charged him 125. You have charged him 125 rupees, whereas you are supposed to charge him actually 100 rupees. So what have you done? You have charged 25 rupees extra in the customer's account, right? So now the customer has actually come back to you saying that, hey, listen, we had discussed that you're going to supply at the rate of 120 100 rupees, but whereas your sales invoice says it is 125 rupees, right? So now what am I going to do? Right, let's take this example of only one item that you have sold. So your sales invoice is for 125 rupees, okay, which you have debited the party account. Okay, so now you have to actually charge him 100 rupees and you are supposed to collect him only 100 rupees. So how do you reduce the balance in his account, right? So you are going to again pass a credit note for excess charge. Okay, so once you do a credit note for the excess charge, so the difference amount is going to reduce in the outstanding. Okay, so originally it was 125, and now by passing the credit note, the balance outstanding is going to be 100 rupees, which is what is going to pay you. Okay, then the third instance that you can see is that basically the third instance is related to tax. Okay, but yes, generally when you are using Tally's GST module, very rarely you will come across this use case, because the GST module in Tally, it auto computes the tax as per the rate that you have configured. So hardly you're going to get this kind of a use case scenario. For some reason, let us say that you were supposed to charge tax amount of, say, 100 rupees on the particular item that you have supplied, but whereas, by mistake you have charged 120 rupees, right? So now you have charged excess tax, right? So now the customer is verified it, and then now he comes back to you, and then he says that, see, listen, you have charged me 20 rupees excess. So which means again I have to reduce this 20 rupees from his outstanding. So what am I going to do? I'm going to pass a credit note. So when I pass a credit note, again it is going to reduce the outstanding of 20 rupees in his account. So this all credit note in the customer's scenario, if you see, it is reducing the outstanding balance. The fourth use case, right? You're supposed to, let us say you are supposed to supply 100 numbers of a particular item that is ordered, right? And actually you supplied only 90 for whatever reason, right? So it could be some error, or in the dispatch some goof up has happened. Generally it's not the case. Okay, in case if it happens in a rare situation, this could happen in handling another thing. Probably this 90 number was supposed to be delivered to some other customer at the same point in time, and by mistake, the boxes got exchanged, and the 100 numbers which was supposed to go to customer A, wrongly, the package of 90 number is gone to customer A. But whereas as per order, you are supposed to bill him for 100 numbers, right? So you billed him for 100 numbers, and he's received the invoice and he's received the goods. He opens the goods and then he checks the item that is received, and then he finds out that only 90 numbers have been received by him, right? So 10 more numbers have to be supplied to him, is the balance which is there. But the customer says, okay, see, now I ordered for 100, but whereas you have only supplied me 90 numbers, but the bill is for 100. Okay, so what could be done? It's very simple. I mean, like, probably you can supply uh, another 10 more. You can give it to him, so that it matches with your invoice. But the customer says, let's say that, okay, fine, now you have supplied 90 only, so 90 is more than enough. In my next order I will see if I want more. So now what you are supposed to do? So you have charged for 100 rupees, but whereas he's actually received the goods worth of 90 numbers only is received. So the difference amount of the value of goods and taxes and other things needs to be reduced, because he is going to pay only to the extent the amount that is received, right? So now what are you supposed to do? You have to reduce the value of 10 numbers, which was billed excess to the party. Now you have to reduce the value. So what are you going to do? You are going to now you're going to pass a credit note, so that it can reduce the outstanding amount of your customer. Okay, so broadly, I mean, like, these are the four use cases. That there could be various other use cases depending on the transactions, but broad, this is only for you to get an idea of why do you pass a credit note, and what impact it has on your party ledger. Again, remember, a credit note is associated with the party ledger, debit note is associated with the party ledger. Okay, so now, in case of a supplier, what is the credit note you can do, right? So let's say you made a purchase, right? So now what you're going to do is basically, let us say we can take this the excess charged. Okay, the excess charged case, in case of a customer, and let's assume that you have made a purchase. Okay, and the party, actually the party is supposed to charge you 100 rupees. Your supplier is supposed to charge you 100 rupees, but whereas, by mistake, is charged you only 90 rupees, right? So now your supplier is going to raise a debit note. Okay, I will explain about what is this debit note, right? So now what happens, in your case, right? So if he has charged you, let us take this use case. Okay, if he's charged you only 90 rupees, that means your outstanding is lower, right? So your outstanding is lower, because he's charged you only 90 rupees. Actually, he's supposed to charge you 100 rupees, right? So now you have to actually pay 100 rupees to the customer, which means now your outstanding has to increase. Not 90, you have to pay him 100 rupees. So how do you now increase this? Okay, so in your books of account, okay, for the supplier ledger, you will now pass a credit note, right? So where you are going to debit your purchases, because originally you debited your purchases as 90 rupees, but actually your purchase cost is going to be 100 rupees. So you're going to debit your purchase account by 10 rupees, the difference amount, and now you're going to credit your supplier, because there's additionally 10 rupees you are supposed to pay him, right? So this 10 rupees what you're crediting is what will come as your credit note in your books of account, right? Where it is going to increase your outstanding. That means your payable is going to increase by 10 rupees. Okay. So that is where you will pass in your books of account credit note for your supplier ledger also. So a credit note in the supplier ledger is going to increase your outstanding to that extent of the amount of credit note. A credit note passed or in the customer's ledger is going to decrease the value amount of outstanding to the extent of the amount or value that you are capturing in the credit note. So the similar kind of an example that you can associate with various nature of transaction. So the whole idea, the core concept that we have to understand is this. Okay, a credit note in a customer ledger is going to reduce the outstanding balance. A credit note in a supplier ledger is going to increase your payable to the extent. Okay. So I hope this credit note aspect is clear now. Especially, like I said, like people who have already been working on Tally or experienced persons, especially the business people, they basically know about this concept, and this is purely for people who are at the beginners, where you get more clarity on these confusing note called credit note and debit note. Okay. So in the next session, we will discuss about the use cases of debit note. I hope you would have broadly understood the concept, but still quickly I will cover in the next session the different situations under which a debit note is raised for like the same example, for the sundry debtors, whether it's debit note can be raised for your customer also, right? A debit note is raised for your supplier also. So generally, or the majority of the cases where you raise a debit note is to your supplier, and the major or the predominant uh, type of transaction that you use to pass a debit note is, the first thing you can associate is towards your purchase return. Okay. So sales return is the credit note, purchase return is going to be your debit note. Okay. So we will see in the next session, we will see in detail about the debit note. So I hope this brings clarity to people who are confused with this debit note and credit note concept. And thank you all for staying till the end, and we will see in the next session and understand the different use case scenarios of debit note. Thank you very much.